0.05% change on the Sensex. So nothing on the indices at least. So 25,820 is where the Nifty is starting at. 25,850 now. The Sensex is starting at about 84,425. So it's basically, I think 30, 40 point change, 50 point change now on the Nifty at this point in time. And a 200 point change on the Sensex. The Nifty Bank is starting with a 100 point bump. That's about a 0.25% higher. Advanced decline is comfortably 2:1 in favor of what is higher right now. IT index, it's this complete flip-flop. We had a almost 0.7% cut yesterday. We got a 0.7% gain today. So 42,265 on the IT services index. And the Nifty heat map is coming up on your screen. And here you've got about 20 odd names which are starting lower, with the rest which are starting in the green. Surabhi.
Okay, the stock that Nimesh just flagged off, it's the best performer on the Nifty now. Tech Mahindra, gain of 2.5% on the back of that positive brokerage note, where the target price, I think, is about just above 1,700. Anyway, it's not just Tech Mahindra. Other IT stocks like Infosys and Wipro are also having a decent start. Reliance is recovering from the blows yesterday. A couple of the banks, Axis and Kotak Mahindra, on the upside of the screen. Basically, the screen is an exact mirror reversal of where we were at 3:30 last afternoon. A lot of these beaten down names are coming back, SBI included. And on the flip side, you actually have the metal stocks finally cooling off. JSW Steel, Tata Steel, Hindalco, they're all shaving off, not much, just about 0.5%. And quite a few of the consumer names like Britannia, Lever, ITC, Trent as well, they are on the way down. So some buying back in banks and IT this morning.
Well, the stock that's running away is Nalco, reacting to that news piece coming in, or the brokerage upgrade coming in from Kotak. Yesterday, to be fair, the stock cooled on from around this 217 odd mark. Today, it's popped back up to those levels post that big upgrade that did come about. The stocks that are getting it, hard on the chin, though, are these gold financiers. That's after, the RBI commentary that came out. They've said that they're seeing some deficiencies identified in select supervised entities, and they've ordered a comprehensive review advice for all of them. So on the back of that, you have Manappuram that's down 2%, Muthoot Finance is down 2.5%, though most brokerages indicate that they could actually relatively outperform, and they're already following most of the protocols that have been laid out. So I'll be interested to see whether or not some of these gold financiers actually recover from these days lows of around 2.5% to around 3% or thereabouts. Well, the other stocks that are moving around quite well, you have Balkrishna Industries that's up close to around 1.8%. So good move is what we're seeing out there. SRF has come in for some profit taking. That stock's down close to around 1.7%. But it's a good start. We're back at around the 25,900 odd mark. The Nifty Bank is finding its form. It's up close to around 200 points. It's down 1,500 points in 2 sessions. So that one will have to find its form if the Nifty needs to recover.
On the gold financiers, look what's happening to IIFL Finance. And this is just sort of commonsensical thinking that because IIFL Finance has been given the green light and the all clear from the RBI right now, maybe the market feels that at least here there's no problem. You've just got a complete green signal from the RBI, so no issues. Who knows what's coming for the others, because this is a sector-wide advisory, so perhaps the others would be on scrutiny. But this is the one where there's comfort in terms of price action. Prashant was pointing out the price is not recovered at all. And now if the others would be under scrutiny, this one's got the green light. Maybe that explains the kind of, very different trades. Pull up Manappuram, Muthoot, and then IIFL Finance. Very, very diverging moves coming in right now on these stocks.
Absolutely. But I would say that the RBI, it's unusual to see this kind of an advisory, broad advisory from the Reserve Bank of India. Generally speaking, more regulatory scrutiny, essentially, for that particular segment is what is out there. The two biggest pure gold financiers, not pure anymore because they do other stuff as well, but they were at one point, Muthoot and Manappuram. Manappuram, of course, is more diversified. Both are lower, and some of the others, and some of the other NBFCs are higher. By the way, it's a decent lift now for the Nifty. We are up 85 points. 25,900 is where the index finds itself at, and it's not a bad-looking screen at all. So some recovery coming through after yesterday's slam dunk. Maybe just one or two other names, and then we'll go across to our guests. Z Media's, was up 10%, I think, yesterday. It's up another 7% this morning. Vamakshi, of course, was telling us what's happening here. 25 rupees on Z Media. Senco is up 3%, the gold jeweler. 1475 on Senco. Our power, Reliance Power, is the top volume traded gainer. There is no sort of, the second name is far behind just in terms of sheer volumes traded. And of course, I think as Surbhi mentioned, Tech Mahindra is up about 3% or so right now. On the downside, PNB is down 2%. And Saregama had a vertical rise. That's down about 2.5%. You know, all day we were highlighting AstraZeneca. You heard from the management as well. It had a 2-day sharp run up. It's down about 3%. So in the context of the run, nothing much. Phoenix Limited is down 2%. That's been correcting lately. Motilal Oswal Financial Services is down about 2%. We'll keep an eye out on these brokers, Angel, Motilal, BSC. You know, if these, as we just put out, the F&O rules are going to come out shortly. They're coming out soon. Incrementally, you know, it starts to, first of all, we need to see if everything which was in the draft circular is part of the final rules, and second, how much of it is already in the price. But I think worth watching the space as we go forward. Let's welcome in our market master of the day. Shreyas Devalkar is head of equity at Axis Mutual Fund. Shreyas, good to have you with us here. Thank you for your time. You know, yesterday we had Mark Mobius with us, a veteran investor. And I mean, actually, even he was, and unprompted, by the way, it was not a question. Unprompted, he said that the SEBI F&O rules may temper overall momentum for markets. Otherwise, I mean, he'd make a case for 1 lakh on the Sensex by the end of the year. That's 15% from here. But of course, I mean, these rules may temper enthusiasm if they were to be harsh, and we'll see how they are. But I just wanted your thoughts, Shreyas. We are reporting that they're going to be out very, very soon. What's your sense? What will it do?
So once actually they are out, let's comment on that once it comes out with the clarity as such. As far as overall markets are concerned, historically also, you have seen that various regulatory changes have been there. But more importantly, it's about basic fundamentals about the stocks and overall economy. And in the flows, it matters. So in my opinion, let's wait for the clarity on the rules and then maybe we can take a view on that.
Okay. Shreyas, hi. Good morning. Good to have you with us. So a lot changing within the market, right? The texture, newer sectors coming back, I mean, forgotten sectors coming back in the mix as well. So you tell us, I mean, any significant overarching sort of thought changes to the strategy, and where would the preference be? The big debate right now is whether it's time to get off the industrial and the capex bus and get on the FMCG, IT, banking, you know that part of the market, that bus. So tell us what's the thought process?
So definitely your observation is right, and it is observed especially in last 3 months. You must have seen that some of the factors like quality has started doing well. Some of those factors and those indices has done well in last 3 months. So since your observation is there on that part, so underlying parameters and underlying sector preferences definitely is visibly changed. In this, then we get more into it and try to analyze where and why. Definitely, as you are highlighting, that industrial sector has had a very sharp run YTD till election, and that's where it had to cool off some time. And probably since the trigger behind for that sharp rally, that sector has seen cooling off in last 3 months as such. With a lot of liquidity in the market, definitely it has found its way in pharmaceuticals, IT, and FMCG as well as private sector banks. So it has gone broadly in these 3-4 places. Now coming to it fundamentally, as far as industrials are concerned, I think the growth remains there. It's the valuation which is a concern. There are no indication that there is any slowdown, because the industrials has been more about power sector, defense sector, and thirdly, railways in that order. So in my judgment, power definitely is a global story. Defense also worldwide, everyone is spending on that. It's a valuation which is where the debate is going on. Secondly, on the where the money is going, it's IT as well as banking. If you talk about those sectors, then definitely in some of these sectors, especially IT, FMCG, etc., then that bottoming out is clearly seen. So there are no signs of improvement, but there has been earning cuts multiple times in last multiple quarters. And earning cuts, the halt of that earning cut has definitely given some hope of revival in those sectors. So we will have to watch out for these results as well. Fact of the matter remains that the volume growth in both the sectors remain in mid-single digit, so that's where the big call on these two sectors will be on. Pharmaceutical definitely doing well, especially both on the domestic front as well as from the US front. And so we are also positive on the pharmaceutical in that sense.
All right. Hi, Shreyas. Good morning and good to see you in. Nigel on this side. The big theme that has played out is the metal stocks, and valuations is not really a point to debate out there because they move with momentum. And the momentum seems to be with the bulls. It's a tricky space, though, because if China actually doesn't come out of this rut that we've seen, then you'll get stuck in these names, given the capacities that are there in China in comparison to the rest of the world. How are you all placed out here? The balance sheets of our companies are in far better shape, but they've run up considerably as well. Your view?
Definitely here there are a lot of news flows always are around. So now if you look at the steps which have taken which are being taken in China, so they have the bigger trouble has been about the real estate. So they came out with the policies first on the monetary front, and the monetary front policies they have been doing for some time. It's not that something new they have done this time around. But in addition to that, they have also tried to take some policy measures on the fiscal front as well. Now, individually, one may try to say that, yes, whether it is sufficient or not to revive the big economy or the big real estate sector in China. But point is, the measures are being taken. There is the big Politburo meeting which is going to be there in next month or this month actually, and so there are indications that yes, they are serious about reviving it. So if there are more fiscal steps are also, if they are going to take, then definitely there should be good positivity around China economy, and obviously in India, the metals is the big play as far as the Indian listed space is concerned.
Just to, Shreyas, hi, just a quick word on the power space here, which has been generally, you kind of ask people what they like, what they don't like, and power will fall in that comfort zone where people are comfortable playing it through different ways, and it's a big value chain, starting from financiers all the way, of course, to product makers, EPC companies. What is your comfort level here, and what's the best way to get exposure in your opinion?
Obviously in power there is asset owner, which are utility companies. In that also there is generator and distribution companies. Then there are capital goods companies, and obviously the financiers you have highlighted. Historically, when it comes to any capex stories, the capital goods companies have been better off. The picking order always has been capital goods first, and then utilities, and then the financial. And it is more to do with the financing risk. The first one is balance sheet light, and you go down, the balance sheet becomes more balance sheet heavy, and that's where it has been the preference from the quality point of view.
Okay. Quality point of view, fair enough. Shreyas, by the way, do you own, without getting into specifics, do you own PB Fintech in any of the portfolios?
So if you see our last disclosed portfolios, then you will observe that.
Okay. No, so you must have heard news flow around this one, right? And we had the management join us yesterday with regards to the new investment they're making in a new subsidiary up to $100 million. Stock corrected last week, a little bit of recovery, but not much. Just wanted your broad thoughts on how you think about this new development. It requires a board approval, the management said, but doesn't require a shareholder approval. As a shareholder, how do you feel?
So without getting into the specific of this company, so if you just notice, there has been multiple such cases historically. And the parameters obviously always you use is in such cases when there is a diversification. where shareholders may think that whether the diversification is right or not. From the shareholders' point of view. So historically, there has been multiple cases, and we use certain parameters for that, whether there are guardrails or not, whether it is and how the management will take up with that the bandwidth as far as bandwidth is concerned. So we have used certain such guardrails earlier as well. Since there has been multiple cases as I highlighted in this space.
Okay, all right, Shreyas, thanks a lot for joining in and filling us in with all of those details, and wishing you all the best and look forward to chatting up with you soon. By the way, keep your eye out on the bottom of the screen. Welspun Corp, they're bagged an order worth around 2,400 crores, and it's come in from the United States. And I think, orders from there haven't been coming about. So that's good news actually for them. The stock as it is I think it's at a fresh 52-week high. But as we speak, that's a big size order that's coming in for the company. Should help them in terms of an outlook, because the US otherwise, there was lack of orders coming in from there. Well, let's move to Bajaj Auto. They've reported a healthy performance actually for the month of September. Their total sales witnessed a 20% surge, with domestic sales up 23% on a year-on-year basis. Exports also saw a double-digit jump. Mr. Rakesh Sharma, the ED at Bajaj Auto, joins us on the show. Hi, Mr. Sharma, good morning and good to see you in as always. Well, tell us about the export market first up. You had indicated in the last time we spoke, with regard to the August data, that Nigeria was seeing a recovery. I think you briefly mentioned 20,000 units. For September, was it even better? And do you expect exports to improve from here on?
Good morning. Yes, as I'd mentioned, there is a steady improvement in Nigeria and also, of course, in exports. You rightly recalled it was 20,000 last month, and this month we have closed at 25,000. So that's a smart recovery. It also indicates, growing confidence of the network for stocking up for the upcoming season. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we've been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
Okay. Good morning, Mr. Sharma. Good to have you on. So it's been looking fairly good, I guess, both on the domestic side as well as the export front. On domestic, if you could throw some more color. I mean, we're now getting into the festive season full throttle. So what are the expectations? What are the kind of inventory levels you're looking to maintain? And what are you expecting from the season this year?
Well, the domestic business is really getting up for the cracker of the month, which is October. But the highlight of September is our green energy portfolio, which comprises of obviously the electric two-wheeler Chetak, the Yulu micromobility two-wheeler, and the electric three-wheeler, as well as our CNG bike. All of them are combining now to be almost 40% plus of our domestic revenues. So that's a really, really, big chunk on green energy, which is continuing to do well. On the motorcycle side, the stocking up has been done, and we are expecting about 6 to 8% underlying growth in October. The like-for-like comparison in September suggests that the market is, even Stevens. It's not in growth mode, but I won't read too much into that, because consumer psychology is such that as you get closer to festive, people tend to postpone purchase to the festive period. And we think that it should have good 6% odd growth. And that the indications, again, are confirming that will be led by the top half of the industry, which is the 125cc plus. That now is accounting for almost 53% of the Indian industry, 47% being the 100cc category. And we continue to see the top half powering away and driving the industry growth.
Got that. Mr. Sharma, hi, good morning. Prashant here. I just want to take one bit on the electric vehicle side, sir. I think in the month of September, you have become the biggest EV player. Counted by everything. I mean, two-wheelers, three-wheelers. I think you've surpassed 25,000 units in sales. So congratulations for that. In terms of specifically two-wheelers, I think the number is about 17,570. So, a competitor is still slightly ahead. Just wanted your thoughts. What should we expect on the EV front going forward, especially on the two-wheeler side? I think market share has also been improving, close to about 22% now. What should we expect here?
Well, on the EV side, it's not just about the September outcomes, which of course put us at the number 2 position just for the electric two-wheeler, a few thousand units behind leadership numbers. But one has to see the momentum. Just in April, we closed April of this year at about 11% for Chetak, but it has now surged to 22%. So besides the number 2 position, we are also looking at the momentum, and we expect to carry this momentum forward, particularly into the important month of October. We are also lining up new launches, etc., which will hopefully put us in a pole position by the time we close the year. So that's looking good. On the E3-wheelers, there also, I think we are neck to neck on leadership position, certainly in the passenger segment, but we combined electric passenger and electric cargo. There too, I think there is the business is enjoying solid momentum for growth and for leadership.
So from 11% in April to 22% now, and you said you expect to continue momentum. You'd want, targets can be, of course, you'd want, as much market as you can. But are there any sort of targets here? By the end of this financial year, where would you like to be?
Well, of course, we have internal targets for what kind of volume we are aspiring to, but I cannot, and of course, we want, like I've always been saying, a leadership position, a podium finish, then a better podium finish and all that. Any business likes to have that kind of ambition. But what exactly the market share settles at is also a consequence of what competition is doing. So let's see how that pans out. But we expect to continue this momentum of growth.
We spoke to Bhavesh of Ola, and he said that he believes that he's going to be the leader. But you're clearly narrowing the gap out there. So pole position is something that you're tracking as well. You have narrowed the gap down considerably from 11%, and I think 35% plus is what they were at. Now you're down, I think, to around 500 basis points, the difference between both of you all. So by the end of this fiscal, Mr. Sharma, you believe you all will be in pole position?
Well, like I said, our ambition is to continue to grow the business. When I look at it purely as an EV business unit, though, as you know, we are, we've got EV, CNG, ICE, we are a full portfolio company. But when I put on the lens, and we put on the lens of just electric, our enemy number 1 is the ICE scooter. So, if we continue to win and cannibalize ICE scooters, then I think we will do at a faster rate than anybody else. I think we will continue to power ahead as we are doing. That is when we are building our product portfolio, when we are building our propositions, the key thing which we have in our mind is what can tempt the ICE customer to move from ICE to EV. And as you know, we have not been in scooters. So this is an absolutely new business segment for us.
No, absolutely. I mean, Chetak on the EV side, those numbers are nothing to scoff at. It's very, very impressive performance. In fact, as we promised our viewers, it's the auto sector full throttle. I think in the next couple of seconds, we'll also have Mr. Hemant Sikka join in from Mahindra and Mahindra as we wrap up the conversation with Mr. Sharma. Oh, okay, Mr. Sikka is joining in. Mr. Sikka, allow us that one last question. We're discussing two-wheelers with Mr. Sharma, and then we come to farm equipment and tractors. But Mr. Sharma, just to complete the point, so we've discussed a lot on the volumes front and the numbers are looking better. Just a word on pricing and the competitive intensity as we get into festive season full throttle. You said we need to see what will it take to shift an ICE customer to EV. One of the triggers clearly is discounting and attractive pricing. Right now, I didn't even know that you could buy two-wheelers online, but apparently you can buy two-wheelers on Flipkart. And there it seems that there's a lot of very interesting freebies, discounts that are being given out. So is that just routine online versus offline discounting, or is there more to it? What should we expect in terms of pricing and discounts this festive season, given the competitive intensity?
Well, people move categories and you build market positions and growth on the basis of fundamentals. These are very transitory things, and it is understandable. It's not just about auto, but the whole milieu is like that e-commerce platforms, other categories, phones, this, that, everyone is wanting to take advantage of this month of festive, which, accounts for about 22 to 25% of the annual sales. So one can understand that. But it just advances sales, I must put that. Now, what happens is our approach on this is that we like to stick to the fundamentals, and we won't draw first blood. But I mean, if there is a gunfight, we'll not go to it with a knife. So, one does end up participating. But having said all that, it just serves to advance the customer, the sales. But the customer expects it because that is the whole atmosphere during the festive. One participates in it. But once the dust settles down, it's back to good product, proposition, and customer care.
You've given us a headline.
Won't bring a knife to a
gunfight. That's the headline, sir.
By the way, Surabhi, I didn't know that you said you could buy a two-wheeler on a e-com platform.
On Flipkart, yes. I don't know about the others.
Buy it on Blinkit.
By the way,
10-minute delivery.
By the way, we pioneered that with Amazon. Chetak was the first one to be available on Amazon.
Wow. All right. We wish you all the best of luck. Thank you very much. Great conversation as always, Mr. Sharma. Appreciate your time here on CNBC-TV18. Well, as promised, Mahindra and Mahindra September order sales have come through. Tractor sales are in line with expectations. Farmer sentiments improving owing to normal rainfall and actually great rainfall. Management expects robust demand for tractors going forward. We have the management, Mr. Hemant Sikka, President Farm Equipment Sector at Mahindra and Mahindra, joining in to take some questions. Mr. Sikka, good morning. Prashant here. Thanks for your time. You've been sort of, in a way, conveying to sort of investors at various forums that the tractor segment is looking a bit more robust going forward. We've spoken here in the past about the full year guidance, and you've said, well, it's got upside risk from that 5% number. And you said that we will revise it. We'll take a look at it once again after the second quarter results. Would you like to do it now, sir? I mean, the quarter is behind.
So, Prashant, first of all, we are seeing very strong momentum in the market. And clearly, this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. So this is giving us a very good momentum. In fact, we have for the first time seen a very strong momentum even play out in the Shraddh period. Mostly you would see, Prashant, that people generally don't buy very expensive assets during this period. But if you see the average of the last 5 years, we are seeing clearly about 10 to 12% better sales in the Shraddh period. And we believe that as the Navaratri period starts in a couple of days, this momentum will further build up and we are heading into a very good festive season. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view.
Q2 is already panned out much better than what you thought, right? What you imagined at the beginning of the quarter, isn't it?
The QT actually is broadly kind of flat. If you see YTD industry is flat, at Mahindra we are up 4%, so we have gained some very good market share YTD so far. But most of the heavy lifting, Prashant, will happen in H2 of this year, and that would give us an overall 5% growth rate.
So 5% would be the overall FY25 growth in the tractor segment that you'll play out. I mean, what more can you tell us about the pickup? Because if you look at, say, the month-on-month performance, and it looks really impressive, September over August. I mean, how are you expecting the coming months to play out? And do festivities matter? I mean, are you expecting a bigger pickup in the festive season, or will it be more linked to the next crop cycle?
So, Surbhi, first of all, in tractor, we should not compare month on month. I mean, auto, you can compare month on month, but tractor goes with the cycle. It goes with the cropping cycle. So, it is always better to compare a YOY scenario. But even on a YOY scenario, we're expecting the industry to start a very strong growth in S2 of this year. Since first half was kind of flat, most of the growth will has to come now in the quarter 3 and quarter 4. We are looking at a very strong momentum. We already seen momentum build up in the short period, and we are seeing the momentum to further multiply in the days to come. And so you are right, festive do play a very significant role in the sales of tractor. Farmers try to time it with the cropping cycle. So as the harvesting, in a couple of weeks, the harvesting will start, and this will lead to then a very quick sowing of the Rabi crop. The good point is all these monsoons are giving us very good reservoir levels. I mean, just to share a data point, the reservoir levels are 13% more than the long period average. Now, this is a very strong momentum building factor for a Rabi crop because Rabi crop depends on what is the moisture in the soil and what are the reservoir levels. So if you have a back-to-back good crop, Kharif is already kind of done. The sowing has been at 110 million hectares. So overall, Kharif will be a very good crop. We are seeing paddy, oilseeds, pulses, sugarcane, maize, bajra, all the crops are going to hit a very bumper output this year, except for cotton, which is below average. So overall, on the back of very good Kharif crop and a likely very strong Rabi crop, the momentum in this market is very positive. And the farmers usually try to time their purchases with festive and with harvesting cycle because that's when the money flow happens. So clearly, you are right, the festive plays a very critical role.
So, Mr. Sikka, let's talk about, just to understand the relative position where we are at in tractors. With this 5% growth this year, where will you be vis-a-vis the peak of the cycle? I mean, I don't know which period would be the peak and how much above or below, is M&M and the industry overall, and what should we expect in the near term?
So we would be 2% below the peak as an industry. So we are almost like at that level, which was the all-time high. But Surbhi, I would suggest that we should not look at peak as the peak. I would say that was an all-time high is the right phrase to use. Because I believe there is still a lot of under-penetration in the tractor industry. We should never look at units sold. We should look at what is the horsepower per hectare sold. And in terms of horsepower per hectare, I think there is still a lot of catch up to do in our agri economy. And that is what is giving us confidence that there are still a lot of headroom for the industry to grow in India.
Horsepower per hectare, Mr. Sikka, and where do you see it headed since you're optimistic on that particular parameter? If you could give us some sense so we understand better. And also, what about your market share? What was it at the start of this fiscal with this 5% growth that you're guiding for? What do you end the year at?
The market share so far, Nigel, has been holding very well for us. So we are, right now for September, I can't talk the number because the industry data is still not out. But YTD August, we were 180 bips higher than last year. Last year, our market share was 41.6, and we have added 180 bips to that. So on market share, I think both our lead brands from Mahindra and Swaraj are doing very well. All our new products have been very well established. For Swaraj, we have come up with a new tractor called Tractor. For Target, we have got a new Swaraj, a completely new styling with better engine efficiency already into the market. On Mahindra side, we have launched Oja as a lightweight tractor brand. So all these products are going into the market. We are getting very good feedback from our farmers, and that is helping us gain a market share in this. Now, coming to the horsepower, currently, Nigel, we have to do reverse calculation that if we have to feed our 1.4 billion population, and we are seeing that the population still continues to grow. So there is a paper done by the government of India which says that by 2030, the horsepower per hectare requirement will be about 4 horsepower. We are currently at about 2.6. So even if the industry continues to grow at 7.6 CAGR, which was a CAGR for the last 15 years, we will have to move from the current population of about 8 million to almost like 17 million. And if we do this calculation, by 2030, the industry will reach only at a level of 11 million. So that means there is so much headroom for the industry to grow. We are looking at units, so clearly number of units, India is the largest market. But in terms of horsepower per hectare, I think there is still a lot of room to grow the industry.
All right, Mr. Sikka, just one quick question. Domestically, you've explained things to us. Exports, very small part of your business. On a low base itself, on a year-on-year basis, I'm comparing September this time to September of last year. I think it's down by close to 10%. Could you explain that to us? Year to date, you've done well. Year to date, you'll have done well on exports. But just for September, what happened?
Yeah, so year to date, just to get the data point across, is 36% growth. We are
yes,
very
36% growth year to date, but in September to September, I think it's down 9 to 10%. So explain it to us.
Nigel, I mean, September has been a slow month for us in exports, and there are two factors to it. One is that in our neighboring countries, there are some geopolitical challenges being played. These are all very big markets for brand Mahindra and Swaraj. And even in the US market, we are seeing that 11 quarters of continuous degrowth in US tractor industry. Now that is, we know the factors, that is on back of very high interest rate cycle, and people were waiting for Fed to start cutting. And now that has happened, I think the transmission will take 3-4 months time. And even in our US, which is our second largest market after India, the sentiment will revive. So that will again give us growth getting into our Q4. But I think for next 3-4 months, the exports might be a little slow.
Okay, all right, Mr. Sikka, we will leave it on that note. Thank you very much for joining in and providing us all that perspective on the farm equipment side. Appreciate you being with us. Well, with that, we have to take a very quick break. Come back on the other side and the corporate conversations continue. We'll connect with Rishi Raj of Max Estates to talk about the company's recent announcements of clocking pre-sales of over 4,000 crores for their Gurugram project. Welcome back. Well, the corporate conversations continue. The next company on our radar is Max Estates. Now, their Gurugram project witnessed pre-sales booking value of 4,100 crore within 30 days of launch. To talk about this, and of course, a lot of fundraising going on now within the company as well. And the growth outlook, of course, has to be discussed. We have Rishi Raj, Chief Operating Officer, Max Estates, with us. Rishi, thank you very much for joining in. Okay, so lots to talk. What do we start with? Let's talk about the response that you've got to this Gurugram project. I think you've already revised the gross development value from 4,000 to 4,800. So is it fully sold out? And would you be revising the numbers even higher? How strong is the demand in the region?
Thank you, Surbhi, for having me in your show. Estate 360, just for your audience, is Delhi NCR's first and truly first intergenerational residential development at scale. The response to this product has been phenomenal. As you said, pre-launch, we gave the guidance of 4,000 crore of booking value in FY25. Given the response, we have already booked 4,100 crore and collected 400 crores from that booking, which is roughly 10% of the booking value. And given the response, we are revising 100% booking value guidance to 4,800 crore to be done in FY25. So this is, in summary, the response to Estate 360. Over to you.
Been fully sold, or do you still have some units remaining?
We have some units remaining. That's why the total 100% booking value guidance is now 4,800 crore,
Now
of
48.
which 4,100 crore has already been booked, which,
Okay.
given the market, is a phenomenal response.
Okay. Rishi, hi, good morning. Prashant here. So,
Hi, Prashant.
what does that do to overall pre-sales for the year, FY25?
Right. So if you look at, Prashant, we entered residential a year back in FY24 with our launch of Noida project called Estate 128, which was 100% sold in July 2023. Booking value was 1,800 crore, pre-sales booking value. For this year, the total guidance is 4,800 crore from this project, and we expect to now launch Tower 4 in Estate 128, which will add to another 800 crores of booking value. So total booking value will be in the range of 5,500 to 5,600 crores.
Okay. So pre-sales of 55 to 5,600 crores in FY25, right?
That's right.
What will, and you know, as you said, you've just entered the residential space, and you've got a strong pipeline on the residential. We'll come to commercial in a bit, but on the residential side, you've got a strong pipeline. What are the numbers going to look like in 26, in 27? Because, I mean, I'm assuming you're sort of obviously planning ahead.
Absolutely. So Prashant, again, just to give a bit of context to your audience, if you look at Max Estates, today we have a portfolio of 12 million square foot. I would like to break that portfolio for the audience. 2 million is delivered, 6 million is under construction, between 2 commercial and 2 residential, Estate 128, Estate 360 that we just launched, and another 4 million is under design, which we have already acquired. And our guidance to the market is that we will continue to add at least 3 million square foot every year to our development pipeline. And that's where the focus is going to be, which will help us increase our booking value from where we are and grow that booking value in coming years. I'm not giving any specific guidance, but needless to say, with this operating guidance of adding 3 million, 2 million in residential and 1 million in commercial, that booking value is going to grow year on year. Also, what I would like to add is, of this 3 million, 1 million is roughly commercial on an average. Today, we are sitting on 4 to 4.5 million square foot of commercial. Our annuity rental income today is around 125 crores, but when the entire commercial portfolio, which we already have, is built and leased, this has an annuity rental portfolio potential of almost 450 to 500 crores, which will further grow as we add to our commercial portfolio.
By when is this, Rishi? 450 to 500 crores?
That is in next 3 to 5 years.
Okay, and you didn't answer the question on pre-sales in 26 and 27. As you, I mean, launch new projects and you come up with these, you put them out in the market, what will the numbers look like? If, of course, I mean, you know, the demand for luxury real estate stays strong, of course, that's a big if, and we'll see. But what will the numbers look like? From 5,600, 5,500 crores in 25, where do you go next year?
Yeah, as I said, not giving any specific guidance, but needless to say, if you look at what we already have in the portfolio, and I'm not talking about what we will be acquiring through the QIP capital and the capital that we have raised, we already have acquired 18.23 acres of land contiguous to Estate 360, which has a development potential of 4 million square foot and which has got total gross development value potential of 9,000 crore. So that we will be launching that in phases starting next financial year. And to that, we will be adding additional acquisitions that we will be doing in the residential space, which will grow this booking value in the coming years.
Okay. Rishi, that's on the business side. Let's also talk about this QIP that you've done. I think you've raised around 800 crores. So tell us what's the end use of funds? And also on the project side, I mean, the investments that you've got from, Max Life, New York Life. Will we see more of that? Will we see more of that in projects? Are talks underway? So give us the thought on funding, both QIP, the money that's coming in the company, as well as more such sort of equity tie-ups on a project-to-project basis.
Yeah. So, Surbhi, we have built now a corpus of 1,300 crores, 800 crores through QIP, 150 crores through pref allotment, and New York Life has invested 49% in two of our 100% leased commercial office tower, Max Towers and Max House, which gives us another 400, to be precise, 390 crores. So this corpus of 1,300 crore will be largely deployed, predominantly deployed in adding to our development portfolio beyond 12 million square foot, meeting our guidance of 3 million square foot addition every year. So this we expect to deploy over next 12 to 18 to 24 months at max. And as far as New York Life is concerned, we are delighted to have New York Life, not just as shareholder in the list co, 23-24%. New York Life is our platform partner for entire commercial office portfolio. With this 49% acquisition of Max Towers and Max House, in entire commercial office portfolio, now they are 49% partner at a SPV level, at a project level. And New York Life is very bullish on India, real estate, and our partnership. And we expect to grow investment from New York Life as we expand our commercial office portfolio.
You know, Rishi, just one last bit. You know, the actual you'll start booking actual revenues on the P&L only FI. I mean, the full flow will only start FI. Yeah, 27, 28, right? That's when the numbers will all start to show up, right?
That's right.
So do you have any sense on what those numbers will how they will progress? I mean, just a broad sense. You're not giving near-term guidance. Maybe you can look far into the future. That's not near-term. So, yeah, go on.
So if you look at what we have already done, if you look at our annuity potential of 450 to 500 crore, if you look at the booking value that we have already announced, 1,800 followed by 4,800 to 55 to 5,600 crore, all of this will start translating into revenue once the possession kicks in. So from a 3 to 5 year perspective, one can look at a total top line in excess of 7,500, 8,000 crore, roughly broadly speaking. That would be a rough guidance from a top line perspective.
So we're in 25, 26, 27, by FY 28?
29, 30.
Okay, FY 29, FY 29 or FY 30?
Yeah, FY 29. Yeah, FY 29.
Okay. 7,500 to 8,000 crores in top line, basically, right?
Correct.
Okay, got it. Rishi, great speaking with you. Thank you very much for your time. Appreciate it here on CNBC-TV18. Good luck, and we'll continue to track sort of new project launches and further developments at Max. I think we want to take a quick look at the market as well. We were up about 80, 90 points when we started. Then the market went absolutely flat. And then there's been a bit of a recovery. So all of it in the last 1 hour or so. Mitesh is back with us. Mitesh, what does one do?
So, Prashant, we are still, managing to stay above or just keep our neck above the levels of 25,800. If that doesn't get broken, I'll still be okay. Though on the stock side, like in the morning I mentioned, we are trading with a mixed bias. So we have I right now have both a buy and a sell call. On the buying side is Chambal Fertilizers. The stock is up about 3%. It's given a good breakout from a range movement. So buy here with a stop at 534. Look for targets of around 575. And after a very good and a long upside, I think Jubilant Foods is showing first signs of correction in profit booking. So we'll recommend a trading sell with a stop at 677 and a target of around 630 on the downside.
Okay, got it. So those are some of the trading calls that Mitesh has. Market's completely flat. I mean, from that little bit of red, now there's a minor 20-point green coming through. Mitesh, just a word on technology. Actually, tech is the one solid space today. Tech Mahindra obviously has there's a positive brokerage note on the fundamental side that's helping the stock. Infosys, quite a few, Wipro, all these names are up and about. So if you could just tell us if you see a trade anywhere and specific levels on Tech Mahindra.
So two things. One, I think, Tech Mahindra recently has had two swing rallies and around 1660. So from a trading point of view, I think if somebody's holding, I would want to suggest taking some profits around 1660. A close above that will be a fresh breakout, but I'm not sure, given the fact that the indices are not showing strength, whether we'll get a breakout or not. So one, try to take profits closer to 1650-60 range. And above that, we'll take a long position with a 30-35 point stop loss for another 100 points on the upside. And within this space, I think what is the strongest to me is Coforge. I think in this entire, last few days of tech pullback or correction, mild correction actually, Coforge was one stock which was sideways and is now trying to break again on the upside. So if I was to buy, I would buy Coforge once it crosses 7100, take a 100 point stop loss and look for a rally of around 7500 or so.
All right, Mitesh, we leave it there. Thank you very much for joining us. Appreciate you coming on with some of that perspective on markets and specific trades as well. We put the focus on commodities when we return. Manisha is going to be with us. Stay tuned.
Welcome back. Let's now shift the focus to commodity markets. We have Manisha joining in with all the action. Manisha, so what's top of mind for you today?
Well, I'm looking at the crude oil prices, Surbi, because if you look at the month of September and the quarter gone by, precious metals and industrial metals have done very well. But you can't say the same about the crude oil prices, which actually put in a decline of 9% for the month of September. And with that, this was the largest monthly decline since November 2022. And not just for the month. When you look at the previous quarter, the crude oil prices have seen a decline of nearly 17%, which has been the biggest quarterly loss, by the way, in last 1 year as well. Well, what really has been weighing onto the market is the China manufacturing numbers that came in yesterday, showing that there has been a contraction for a fifth straight month for the month of September. Also, Libya has been saying on and off that they would resume and start exporting 500,000 barrels per day as early as next month itself. Saudi Arabia has been coming out with statements suggesting that they will abandon the unofficial price target of $100 a barrel and they are willing to work with something lower. And then OPEC and allies already once have delayed their output increase of 180,000 barrels per day. That comes in on the market from the month of December as well. And that's exactly what the street is looking at. The reason that you're looking at $70 holding for the Brent prices is, one, there are escalating tensions in the Middle East. There is every day one headline coming in from there. And then the U.S. crude stocks also seems to have declined in the U.S. The markets also are looking at almost 20% of the oil output shut in the Gulf of Mexico. This is after Hurricane Helen. So that is what is providing some premium to prices. But when you look at the overall markets in 2024 until now, and we've done 3 quarters already, the high for the Brent was at 91.2. The low that we saw in the month of September was at 87. And we are working with the low was at 69. And we are working with that 72 at this point in time for the month of October, the first day that is. When it comes to WTI, well, the high has been 87. September low has been almost 65. And we are trading at around 68 to 69 at this point in time. So the kind of lows that we saw in the month of September, October has started on a strong footing, let's say that. Well, going forward, the expectation is that for this year, until the kind of numbers that we have, the expectation is that the demand growth has been anywhere between 1 to 1.7 million barrels per day. Clearly, OPEC has been suggesting it on the higher side. But going forward, when it comes to prices, it clearly is a divided street. UBS, for one, says that they're looking at $75 a barrel of an average price for the next year. Bank of America says that 75 is what you could be looking at in the second half of this year. Goldman Sachs has lowered its average for next year to 80. And Citi, clearly the most bullish, most bearish rather, when it comes to the crude oil prices, $60 as a possibility for next year is what they're anticipating.
All right, Manisha, thank you very much for that. So those are forecasts as far as oil is concerned. We'll take a break here. We come back with our segment. It's the economy. My colleague Lata will get chatting with K. Ravichandran of ICRA and Somshekhar Vemuri of CRISIL to focus on the health of the corporate debt in the first half of FY25. And as we look into the second half, stay with us.
Welcome to It's the Economy. We know that Indian corporate equities have done exceptionally well in the first half. How did debt do? How did corporates do on debt metrics? Well, it appears equally brilliantly according to the rating agencies. CRISIL says 506 companies were upgraded by them in this first half and only 184 were downgraded. ICRA says their number of upgraded companies were 2.2 times the number of downgrades. That's more than double. But this is, of course, average, sectorally speaking. Within them, there are some ultra-strong sectors and some weak ones like chemicals and textiles. Both rating agencies have written in their release. To get an idea of the sectors and, more importantly, the outlook, how long will the debt metrics look so good? I have with me Mr. K. Ravichandran, Chief Rating Officer at ICRA, and Somashekar Peburi, the Chief Criteria Officer and Senior Director, Regulatory Affairs and Operations at CRISIL. Gentlemen, thank you very much for your time. Somashekar, if I may start with you. Excellent upgrade, downgrade. Is this the best ever ratio we have had, 506 to 184? Is it, or, 2008 was perhaps the last such superb upgrade-downgrade ratio?
Lata, thanks for inviting us. Yes, the number of 2.75 is amongst the higher ones that we have seen. But just after COVID, when there was a very sharp rebound in the economic demand and the cash flows were very robust and companies were just intent on deleveraging, we did see a much higher number touching even 5.5 times in the couple of years back. But yes, I mean, this is amongst a number which is amongst the higher side, 2.75 that we've seen in the first.
Okay. Ravichandran, would this also rank among the best for you? How does it compare historically?
Yeah, historically we've had, historically we've had on annual basis more than 3 times, especially in financial year 2022. Since then, it has been moderating. We had about, 2.2 times, for the, off year ending September, 24.
Okay. Somashekar, how are the number of downgrades doing? Are they falling or rising? If you only compare downgrades historically.
When we look at the number of downgrades, that's 184. But when I look at it as a percentage of the overall base of about 7,000 companies, that came in at about 5.3%. And yes, it is lower than our 10-year average of about 6.5%. So it is trending a little downwards, as well as if you look at another metric, which is defaults. Even there, also the default rate is also trending lower, at about 0.4% annualized. So that also indicates that there is resilience and buoyancy in terms of cash flows, which is there.
Okay, let me come to sectors. Ravichandran, who did very well, and it looks like both of you have found chemicals and textiles on a weak footing. If you can explain, give me some nuances, Ravichandran.
Yeah, sure. See, in the case of chemicals, China has been the biggest, spoil sport. They have huge capacities, so more than 10 times bigger than India. So because of the slowdown in the construction sector in China, they are left with huge overcapacity, which they are flooding the market, which is resulting in higher inventory and price related, impact. It is ebbing in few cases. There are, chemicals is a really omnibus term. There are different subsegments within that. The deep impacted would be agrochemicals. Otherwise, if you look at sector which has really turned around, would be specialty chemicals. Other chemicals like, petrochemicals and polymers, etc., they would fall somewhere, in between in terms of impact. So most of them are in somewhere in the, low to mid end of the, margin cycle.
Okay, that's important to note. Somashekar, both you and ICRA are pointing out that infrastructure has done very well. In fact, Ravichandran's note also points out to power, more specifically renewables doing well. Can you tell us, infra has always been the one that was dragging the averages down. Why are they looking good, and is the outlook also good?
So coming to infra, over the last at least 4 to 5 years, what we have seen, the credit quality trends have started showing an improvement. And there are multiple reasons for that which are there. If you look at segments such as renewable power capacities, you are seeing a lot more participation of central counterparties, which is there. That is giving a lot of comfort to the stakeholders in terms of payment security. And we are seeing a lot of upgrades there. Also contributed in part by the fact that there is lower debt, which is sitting compared to what we had expected in the renewables, as well as takeover by stronger sponsors, which is there. Road projects, if you look at especially the HAM road projects, as they achieve milestones and the project risk reduces, so they naturally tend to reflect the counterparty risk, which is NHA, from which the annuities start coming in. So that's also a sector which is doing well. The construction segment also is amongst the ones which has done well amongst the infrastructure linked sectors because of fairly robust order execution. And capital goods segment is benefiting as a lot of infrastructure spend. If you look at overall infrastructure itself, 38% of the rating upgrades in our portfolio of the 506 I have mentioned are either infra or infra linked in the first half.
If infra itself, yeah.
And outlook also, when we looked at 12 different subsegments of infrastructure sector, we have a fairly positive outlook on almost all of them. So outlook also is fairly positive.
Okay, that's good to hear. Even Ravichandran points out in his release that many projects have transitioned from project stage to operational stage, and that has accounted for healthy infra balance sheets. Ravichandran, what's your sense about financials? The anecdotal news, RBI going after gold companies, unsecured debt, microfinance. Is financial sector as good as it was last first half?
Yeah, financial sector overall, still they're in a healthy position, I would think. But within that, there are certain segments are showing signs of incipient stress. The companies which are dealing with unsecured loans, personal loans, business loans, and MFI loans of late, they are seeing strains in few states, I would think. Largely on account of unabated, lending by the industry. The growth was upwards of 25-30%. Because of that, and also the multiple leveraging by the borrowers, it was a heady combination, resulting in stress in few pockets. But within MFI, there are large MFIs who are not affected that deeply as compared to smaller MFIs. I would think they're well capitalized and they should be able to ride out this storm, especially after the industry level guardrails which have been put forth by MFIN.
Okay, that's good to hear. Guardrails have come in, but it's important that the debt is showing some strain. Somashekar, one of the best paragraphs in your release is the outlook. Just tell us, how does the debt quality look that it will sustain in all of FY25, FY26?
Yeah, so, when we look at the outlook, both on the corporate side, infrastructure side, as well as even when we look at the financial sector side, I think the credit quality outlook is fairly positive. Government continues its infrastructure investment. The private consumption is something which is reviving. Also, we are anticipating rate cuts which will start happening, and that should spur a bit of domestic demand as inflationary pressures are likely to kind of subside. So what we will, on the other hand, be watchful of is, the heightened geopolitical risks, which could create some bit of a challenges, if at all, on our export-oriented sectors and disrupt supply chains. So that's something that we are a little bit cautious about. And like I think what Ravichandran mentioned, in the financial sector specifically, unsecured loans and microfinance are pockets where asset quality numbers could show a little bit of increase in terms of delinquencies, and that's something which we'll be watchful about.
Okay. Two last quick questions to both of you. Ravichandran, has capex picked up? And usually debt starts looking difficult when capex really takes off. Are we anywhere in that inflection point?
See, capex, one has to look at capex by listed companies and unlisted companies. When it comes to listed companies, certainly there has been a good pickup, especially in the green areas of the market, pump storage and renewable energy, EVs and so on and so forth. Plus other capital intensive sectors like oil and gas, telecom, metals. All of them are in midst of brownfield projects and greenfield projects, etc. So on a year-on-year basis, I would think the capex has been growing by more than 10-12%. When it comes to unlisted companies, that's a very large pocket, also contributing to capex in terms of overall gross fixed asset formation. There, I mean, the kind of growth has not been that good, I would think.
Okay. What about you, Somsekhar, quickly on capex?
So very clearly, we've done an interesting analysis on 900 companies in our portfolio, and we are seeing that fiscal 24 and 25, the aggregate annual average capex is about 4.3 lakh crore compared to 3.2 lakh crore just prior to the onset of COVID, 2019 and 2020. Other thing which we looked at is we look at capex intensity, which we are measuring by capex to EBITDA. That is at around about 50% currently, compared to even a decadal high of 72%. So we would say that the capex intensity is not that high. In terms of sectors, yes, steel, cement, oil and gas exploration and refineries, also PLI-linked sectors, including pharma and some electronics or auto components. Those are the sectors which are seeing a lot of capex in the manufacturing sector.
Okay, just 10 seconds left. But Ravichandran, you're most bullish on the hospitality sector. No downgrades for the past 2 years.
Yeah, that is certainly reflected in the high room tariff and occupancy. Over the years, there has been minor slowdown, I must confess, in the current financial year because of elections and heat wave, etc. But then, if you look at the anticipated supply additions, according to our estimate, that will lag demand growth rate, especially in metros. Rates are going to be very firm, at least for another 2 years. That's a good sign for some of the large hotel chains, according to us.
Okay. On that optimistic note, let me wrap up this discussion. Thank you very much, Somsekhar and Ravichandran, for laying out the debt performance of the first half. It's been excellent. That's the verdict coming from the two rating giants. But of course, there are some chinks in the armor. Textiles and chemicals haven't done too well. And hospitality, of course, gets a huge thumbs up. Most importantly, infrastructure is doing very well. That's really the benchmark of debt performance. Thank you very much for joining us on this special edition of Bazaar. After a break, Chartbust.